Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. In today's video, I'm going to share with you the most important company in the stock market. Probably one of the most important companies in the world. I will explain who they are, what they do in a second. But before we do that, we have to talk about what happened in the market yesterday. Yesterday, if you invest in the stock market, yesterday you would have seen massive jump in your portfolio. I have not added a penny to my portfolio. Yesterday at some point was 58,800 at one point yesterday, right? Then guess what happened? It went almost at 61,300 at some point, okay? And that's not money that I've added. I actually didn't even know what was happening in the market because I didn't have, I was very busy, went to bed early, and then woke up this morning, checked the market, and I was like, whoa, what is just happened here? Okay, so yeah, so it's been one of those days. I'm looking at this. I have not seen this much green since 2020, and to see the S&P 500 go up 5%, the Nasdaq to go up 7%, it reminds me of those days where we just, at the time in 2020, we thought the stocks only go up, and they all go up 10% every single day. And that's what is almost happened yesterday. And is it sustainable? It might be, okay? And the reason this happened is because of this, okay? So the Dow jumped that much because the expected inflation hike was actually, inflation numbers were slightly lighter than expected, okay? So it was slightly better than expected. So inflation was last month, I think it was 8.2, and this time is 7.7. Analysts were expecting about 8.1, 8.2, and so on. Some were actually expecting it to increase, but it went actually the opposite. What does that mean? So that means basically the Fed might now look at the inflation coming down, and instead of increasing the interest rate 0.75 next time, we might increase 0.5. And that's a good news. So the ones, if basically the Fed stops increasing the interest rate, right, the stock market will start to go up again, because that's what tends to happen normally, right? But inflation has to come down to expected levels, like it's basically 2%. And right now we're looking about 7.7%. So we still have a long way to go. But the fact that inflation in the US is coming down slightly, that is a good news for the stock market, and that is good news for the Fed. And they might just say, you know what, we just now need to stop basically making it, basically increasing it higher and higher every single month. They just increase it basically 0.5 instead of increasing 0.75, which is a lot higher, right? So that's the reason. That's basically what the stock market, this is what the stock market have seen yesterday, and decided to go up 7% the Nasdaq and 5% at the S&P 500. Trust me, I'm not complaining. It's a great day, okay? Because I do own a lot of companies that were in the red, but yesterday, because they went up 10% and I was only down 5%, I'm up 5% now, which is absolutely crazy if you think about it, right? It shows you basically how the market can move quickly. 2 more days of this, I'll probably be in the green for all my portfolio, basically every stock in my portfolio. I genuinely mean it. Apart from maybe 1 or 2, majority of the companies I own will be in the green if that happened. And I'm sure you will be in the same boat. So when you see something like this, is great, but at the same time, you have to think about the bigger picture. That is, right now, inflation is above 7%. It needs to come down to at least 2%. So the interest rates will keep going up, but it might just go up slowly instead of like 0.75 or whatever. Now, that's if you live in the US. Things are getting better for you guys. But here in the UK, for us, it's not great. Okay, the economy contracted again, 0.2 in just basically this quarter. And yeah, it's all doom and gloom when you look at the UK side of things. Britain's businesses are running out of fight as country faces longest ever recession. Okay, and when you see this kind of news, it kind of just disheartens you, because it is the reality and is exactly what's happening in the UK. And things might get worse as basically the cold weather starts. Okay, so we just have to keep going, just keep doing what you're doing, keep investing. You will have these type of days, and you will have red days as well. But one thing you need to keep doing is dollar cost average every single month. Right, let's talk about the company that I want to talk about today, and that company is this company, ASML. This is a Dutch company, is in the semiconductor, and the reason I said, I'm going to explain to you a few reasons why I think this is probably one of the most important companies in the world. This company makes the machines that are used to make the chips that go into everything we use these days, from cars to planes to mobile phones and so on. So they manufacture the EUV machines as well as DUV machines, and I'll explain some of those things in a second. So they have monopolized that market. These are the two machines. Apparently they are as big as a double-decker bus, one of them anyway. I think it's this one, or I can't remember which one, but they are quite huge machines. And the DUV machines are slightly cheaper, and when I say cheaper, each one of them costs 150 million and above. They print moderate advanced chips. They used to for like a lower gadgets, lower budget gadgets if you like, whereas the EUV machines, okay, cost above 200 million. In 2030, they may basically coming up with a new one. Apparently, that's going to cost from 300 to 400, whatever. They print the most advanced chips. They're used in high technologies, for example, devices, gadgets, and so on, just like the mobile phones, like our iPhones and so on. Okay, some of the things that they're going for this basically company, and especially for the devices that they're creating, they print all these transistors that are basically 10,000 times basically thinner than a human hair. So these basically devices that they make in those chips that they make, or transistors they making, they are very, very thin. And that's why our laptops, phones, and everything is getting thinner and thinner, because a lot of the technology inside it is actually basically getting thinner because of these machines. For in the next basically 10 years, the demand for these products is actually are expected to grow. So global chip market is expected to reach 770 billion by 2030, and chips are almost basically in everything these days, from cars to mobile phones and so on. And this company predicts about 11% growth annually every single year until 2030. One of the things that I love about this company is the fact that they're buying back their own shares, and they are basically increasing the dividends every single year. Right now, they're the only company that make these products. Okay, and for that reason, basically, I don't know if you heard in the news recently, the US came out and said you cannot sell. So all the chip companies were told, and semiconductor companies, you cannot sell anything to China. And this was one of the companies, because the technology behind this, right, is actually, the patent is actually lies with the US. So they have to kind of pay attention to what the US wants, obviously. But at the same time, they've been told they can't sell to China the EUV ones, but apparently they might even stop selling the older technologies, which is the DUV. So all the geopolitical situation is obviously one of the things that I would say will be a negative for this company. And the final thing I want to say in terms of negative is because they're, in order to make these machines, you've got some million different devices, and obviously you have to have the suppliers or whatever. So if because of the supply chain situation that we've had recently, that has actually impacted the company. But generally, to monopolize a market that is very well in basically in demand right now, I think that for me is one of the most positive thing about this company. A company that is growing in terms of revenue, company that monopolized the market, and recently, because of what Intel is doing in the US, okay, they've actually ordered 340 million worth of basically their machines, okay, so chips to make, so they can actually make the chips that they want to make in the US. So this company is in the right place. So what we now need to look at is their financials and see if they are a buy right now. When I planned this video together, just before I before I became ill, before I got sick, right, it was actually down quite a bit at the time. But since in the last few days or last week, is actually went up almost. I think only yesterday, I think it was about 12% or whatever it was, 14.5% up yesterday, just there. 14.5% up yesterday. So when I planned the videos, actually it was a lot cheaper But nevertheless, we're going to look at it right now and see if it's still actually a discount, and see if we can actually, might be a good addition to our portfolios. So we're going to look at everything right now. Right, so in terms of the current price, we're looking at $560 million. $560 right now per share. EPS is 13, almost to 14. Market cap only 190 billion. So in a way, I thought this will have a huge market cap, but obviously is not as huge as I thought. But $200 billion market cap is actually quite big if you think about it, right? And it has wide economic mode, obviously, because they have a competitive advantage. There's not even competition out there that can compete with not in one single company that can compete with this company. Obviously, there are smaller companies, but they don't have the same amount of infrastructure and power, all right? Beta is quite high, in case above 1 is quite volatile. PE is right now 40. So when you look at that, you think, okay, there's no way on earth that this company will be a cheap company. But obviously, investors are looking at the future, because remember, we are future looking creatures, because in the end of the day, as an investor, you want to see if you're going to make money, right? So in the future, not what is happening in the company already. So when you look at the company, the future of the company, you might say, do you know what, I'm willing to pay this much money for this much return in 10 years. Okay, so price to free cash flow right now is about 20, which is basically where roughly the market is slightly lower than what the market is, which is quite nice. So that shows me the company is a little bit cheaper in terms of price to free cash flow. Dividend yield 1.18, 5-year growth rate of 36%, dividend growth streaks 12 years, payout ratio 13.5%, and then safety, so that means they can increase that dividend anytime they want. Safety 82%, which is really good, and $8.4 billion in the bank right now that they can use for all sorts of things. Margins really look good. Profit margin 28, operating margin 32, return on equity 64% and above, right? Total return in the last 10 years, you're looking at about 22%, which is probably why a lot of people are looking at the company and thinking if they can do the same thing in the next 10 years, then you will be in a good position. Current ratio is way above 1, so that's a nice bit to know, because they don't have a lot of debt. And the next 5 years, we expect almost a 30% growth every single year in terms of earnings, according to Yahoo Finance. Current price, we've already seen $560 per share, but fair value, according to simply Wall Street, is $676 per share. That means 17% undervalued at the moment. Fair value, according to Morningstar, is 700. Morningstar is also saying it's about 20% cheaper right now. Price target for tip rank is 610. They're saying about 8.7, almost a 9% upside if you were to buy this company. And they are saying it's a strong buy. I completely and actually agree with that. Okay, based on what I've showed you already and what I'm about to show you, I think this company is a strong buy right now and probably be a good addition to a portfolio that is a long term. All right, so if you're looking at quick money, then you might not make that, because the stock market is really right now in a very volatile situation. But if you're looking from 5 to 10 years from now, it's a good company to have in your portfolio. Again, I'm not a financial advisor, but you need to look at the details on your own, right? So 2018, the company made almost about $11 billion, 11.8, 13.9. So every single year, and 2020 and 2021, there was a huge jump, almost a $5 billion jump there. And then 2022, we're looking about right now $19.7 billion. Okay, in terms of the cost of that revenue, is actually steadily growing, but it's not huge. But gross profit is actually grew from 5 billion to right now $10 billion. Net income from 2.5 to now 5.6, so it's almost doubling. And then EBITDA from 3.3 to right now 7.2, which is also great. Free cash flow from $2.4 billion to almost now $8.4 billion. There's a slight decline in 2021, 2022, but that's absolutely fine. There's probably the companies, maybe something to do with the supply chain issues or whatever. They're buying back their shares, like I've said already, every single year. You can see they bought a little bit of that company back. And again, this is a very good, especially when the stock is down. I hate companies buying back their own shares when the stock is trading at very high multiples, okay? But the fact that it's actually they're buying back the shares, is actually a good news for us as investors. Now, in terms of Sharia compliant, as you can see, is 100% from business activity, 2.5 in terms of interest-bearing debt, and then interest-bearing security is 2.5 as well. So nothing too big in that, nothing to worry about. Now, a couple of more just things I want to show you. Okay, for 10 years, if you look in the revenue and you want to know exactly how much the company made in the last 10 years, from 4.7 to right now $19.7 billion, they're heading the right directions. Okay, all the metrics, when you look at it, basically they all look absolutely amazing. And also when it comes to the dividends as well, okay, they have increased that dividends almost doubled it basically this 12-month period. Okay, that is in euros, by the way. All of these are in euros as well. So overall, it looks a great company. It looks like it is actually undervalued at the moment. Okay, and the fact that the products they're selling is nobody else is selling this product right now. And Intel, so their client, the top, basically their main clients are Intel, Samsung, and Taiwan Semiconductor. These three companies make almost every chip out there. And they cannot make these chips without these technologies, without these systems. And each one of these systems costs, this one is from 150 to almost $200 million. This one from 200 to 300 million per just device. Okay, and it takes ages to ship from A to B, whatever. But the most important thing is the three biggest companies that make those chips cannot do anything without these technologies. And there's no other companies out there that are selling these products. And for that reason, I've been dumb enough not to actually add to it while it was down. But just because it went up so much yesterday, right? I think I was down, I don't know, 8%, 9%, whatever it was, right? No, actually almost 13%, I think it was, because it went up 14% and now I'm actually 1% up, right? So whatever it was, yesterday morning I was in the red. By the time the market closed, I was in the green. Now, what I'm planning to do is, this company right now, when you look at my overall portfolio, if you look at the holdings, for example, ASML is actually quite low in terms of, where is it right now? Let me see if I can find it. That is, where are you? Here we go. Is only just about 2%. And not basically initially my allocation was just to have 2% of my portfolio. Now I've changed my mind since I've done this research. I'm going to make sure this is minimum 5%. Okay, so some of these companies up there must have come down a little bit. Okay, especially companies like 3M, for example. I might bring that down and add more of that company, or just whatever. So I will see how it goes. But my plan from now on going forward is to buy this company while it's still undervalued, okay, as much as I can in the next few weeks and months, just to make sure that I get to at least 5% overall my portfolio. If it goes above 5%, I actually don't mind. Why? Because I'm going to hold this stock for at least 5 years, and then we'll see what happens from there. And in 5 years, things might change. You've seen what just happened yesterday. It takes, if the sentiment changes, if inflation comes down in the US, right, where this company basically is trading right now, I guarantee you it will go up. The whole market will start going up once inflation starts coming down, unless there's another crazy stuff happening like war or something like that. So yeah, that's my plan. That's what I'm doing. That's the company that I wanted to talk about today. And like I said, I genuinely believe this is probably one of the best companies out there in the world. That's probably not many people talk about. I'm definitely going to buy more of it, like I said, but please do your own research. Don't buy this company because some random guy on YouTube talked about it. Okay, if you do your research and you genuinely believe in the business, you understand what is going on with the business, the trend, and what is happening right now. Obviously, in the US, the government has a bill right now that they're trying to help their own companies in the US, especially Intel and so on, and Micron and so on, to build their own factories and start building those chips in the US instead of going to China or Taiwan or other countries. Why? Because of the geopolitical situation between China and Taiwan. If something happens between those two companies, right, it could also hurt, by the way. What could happen is if Taiwan and China, something happens between the two, and Taiwan Semiconductor can no longer produce with the chips, whatever, then obviously that's one of their biggest customers gone. So that is another negative thing about this. So I'm taking a risk while I'm buying this. So you need to do the same, and you need to do your own research and think about it. Okay. Have a wonderful day. Inshallah, what I'm going to do is I'm going to do another couple of videos just this weekend to make sure that, inshallah, just to kind of catch up with everything in the portfolio. So I'm going to go through every single stock. I'm going to talk about all the dividends, how much stocks that I bought, what I sold, and all of that stuff, inshallah, coming up in this weekend. Have a wonderful day. Assalamu Alaikum.